Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. Glad you're with me today. Thanks for joining. Today, we're going to ask the question, can I withdraw from my IRA for a down payment on a home? And we're going to answer that question. So let's dig in. So if you're thinking of buying a home, maybe you're struggling to come up with enough money for a down payment, you might be looking for options. So if you have an IRA, it could be tempting to dip into it to fund that home purchase. But some people wonder, can you actually withdraw from an IRA for a home purchase? What are the rules around it? It might seem like a convenient solution, but you want to understand the potential rules around it, the pros and cons, et cetera. So before we dig into that, let's talk about just a quick refresher on IRAs, what that means. An IRA is a tax advantage investment account that is set up to help individuals. It's not through a business, it's an individual account to help individuals save for retirement. Although the acronym IRA technically stands for Individual Retirement Arrangement, most people just call it Individual Retirement Account because it sounds more logical. It just makes more sense. So just a quick fun fact there. So there's several types of IRAs. Two main ones people think about are traditional IRA and Roth IRAs. Each has a unique tax treatment. So traditional IRAs are typically tax deductible under certain conditions. Roth IRAs are typically not tax deductible, but the money inside grows tax free depending on how it's invested. So kind of a opposite ends of the spectrum on how tax treatment of IRAs are there on those two types. And IRAs are pretty central to retirement planning. A lot of people have IRAs. They're meant to be individual retirement accounts, and those tax treatments are kind of the feature of it. So generally, both types of IRAs impose a 10% penalty when funds are withdrawn before age 59 and a half. However, there are some nuances and exceptions, and one of them happens to be when you're a first-time homebuyer. So let's talk about how to use IRA funds for down payment on a home. So again, withdrawing early, quote, from your IRA, which means before age 59 and a half, can result in that 10% penalty. But the IRS makes an exception for first-time homebuyers. There are lots of exceptions. If you look at the list that's linked in the blog post version of this episode, you'll see a lot of different exceptions. But the one we're talking about today is, of course, first-time homebuyers. So you want to make sure that you're eligible first to meet that requirement. So according to the IRS, you can use up to $10,000 from your IRA toward a first-time home purchase without resulting in an early withdrawal penalty. However, the $10,000 limit is per person. So if you're married and both you and your spouse have IRAs, you could potentially withdraw up to $20,000 penalty-free for the home purchase. So while you won't face the 10% penalty for early withdrawal, you'll still be required to pay income tax on the amounts that you withdraw. So I misspoke when I said tax-free. It's actually not tax-free. You can avoid the penalty, but you still do pay taxes, assuming it's a traditional IRA. So it is worth noting at this point that the $10,000 limit applies to both traditional and Roth IRAs. So if you have both types of accounts, you'll need to keep track of the total amount you withdraw to make sure you stay within that penalty-free limit. And that said, the guidelines for Roth IRAs are a bit different. So at any point and for any reason, you're allowed to withdraw the amount up to what you've contributed originally to your Roth IRA without taxes or penalties, since those contributions have already been taxed. So after your contributions are fully withdrawn, you can take up to $10,000 from the earnings in your account without the 10% penalty if it's for purchasing a home for the first time. So a little bit of a nuance there. So you want to also consider how long you've had the account. If your Roth IRA has been active for less than 5 years since your initial contribution, you might have to pay income tax on any earnings. But if your Roth IRA has been established for 5 years or more, then typically you can withdraw those earnings tax-free and penalty-free, again, assuming it's for purchasing a home as a first-time homebuyer. So what's a first-time homebuyer? The IRS defines a first-time homebuyer as someone who hasn't owned a home in the past 2 years. And again, that definition is specifically for this purpose. There are other scenarios where the IRS defines first-time homebuyer differently. But in this case, for using this feature of an IRA to withdraw for a down payment, it's defined as someone who hasn't owned a home any time in the past 2 years. So if you meet this criterion, you might be able to take advantage of the exception and use your IRA funds for a down payment. The home Can be a mixed use property, for example, a duplex, for example, but the home must be your primary residence. Also, the $10,000 limit is a lifetime cap. So you can't use the first time homebuyer benefit to purchase another home in the future, even if you use a different IRA. So it's a lifetime cap on that. Keep that in mind. So, what are the pros and cons of using IRA funds for a home down payment? It can be tempting, again, especially if you're kind of struggling to come up with a down payment, but you want to weigh the pros and cons. The pros are it might help you avoid PMI, which is mortgage insurance. So, if you have a larger down payment, you might be able to avoid paying private mortgage insurance, which is typically required when you have a down payment that is less than 20% of the purchase price. It can also lower your monthly mortgage payments. The pro can be that a larger down payment helps reduce your mortgage payments, which can give you more cash flow and lower your debt to income ratio when it comes to your mortgage. Also, can help you build equity faster. A larger down payment helps you initially build more equity in your home right off the bat. What are the cons? The downsides? Reduce your retirement savings. Obviously, is a downside. If you withdraw funds from your IRA, you've got less money available for retirement. So that is a pretty clear given there. Also, you're foregoing potential investment growth. So by withdrawing those funds from your IRA, you're missing out on potential investment growth that could have occurred if the funds remained in the account. So it can be appealing to think about pulling funds from your IRA for a down payment, but you want to make sure you think about the long-term implications, weigh that against your immediate needs and goals. And always a good idea to consult with a financial professional as well, financial advisor, accountant, someone that can help you kind of talk through this. Also, alternative options for a down payment. It never hurts to consider alternatives outside of this while you're thinking of this. So you might be hesitant to withdraw from your IRA for the reasons we've discussed. You might instead think of just saving aggressively, make a budget and save more aggressively. That's a good old fashioned way to do it. You also might explore down payment assistance programs. So many states and municipalities offer down payment assistance programs for first time home buyers specifically. They can provide grants or loans to help cover upfront costs. These programs typically vary from state to state. So you want to just search for things like down payment assistance programs for first time home buyers and then your state. So I'm in Indiana, for example. So I might search for down payment assistance programs for first time home buyers, Indiana, and I'll find a whole list of potential programs. Also, you might consider a 401k loan. A 401k loan lets you take a loan against your 401k, but has a whole bunch of downsides to it. So go look up my article or podcast episode on 401k loans for all the scoop on that. Also, gifts or loans from family. That might be an option as well. Not crazy about loans from family because it's just so fraught with, emotional complexity, but gifts from family members potentially could be a way to look for raising funds for down payment. So it's a big decision, buying a home is a really big financial decision. So you want to explore all the options possible before you jump into this. So let's say you do decide to withdraw funds from your IRA for a home purchase. How do you do it? First, check your eligibility and make sure that you qualify for that first-time home buyer status. Then you will withdraw the funds from your IRA custodian. So wherever your IRA is held, it's like a bank or an institution or a custodian. You contact them. In some cases, you can just withdraw the money electronically if they're more of a high-tech custodian. Otherwise, you contact them, ask for the process, might be a form to fill out, et cetera. And then, once you've withdrawn that money, you want to be sure you track that and talk to your tax professional about it because you want that to be tracked properly on your tax return so that it's not, subject to those penalties. Also, a note here, you have to close on the transaction of your home within 120 days of receiving the funds. So that's something to be aware of. And so again, the process might vary depending on your particular institution. So contact them for guidance first, and they'll help you with the withdrawal process. Also, again, I've mentioned this before, don't be afraid to look for professional guidance as well. So, look for help from maybe a financial advisor, tax professional, someone who you trust to help you kind of talk through this. So, wrapping up, you want to be informed when you make this decision, but just knowing it's an option can be really helpful in a lot of cases. Sometimes it does make sense. It's a very personal decision based on your situation. So again, think about, the tax implications, Think about the implications for lowering your retirement account balance, potential returns. Weigh that against the need for short-term cash, and balance that against how much it makes sense to justify using funds from your IRA for a down payment for a home, and what that means for your future as well. Sometimes it can make sense. Just depends on your situation. So think about those things carefully, weigh the pros and cons, all the options, and know that it is an option for many people to use your IRA funds for a down payment for a home. So I hope that's been helpful. As always, if you have questions about this or anything else, feel free to reach out. My website is elevationfinancial.com. You can send me a note there. You can send me a note through any of the social profiles I'm on, which is pretty much all of them. Or even better, if you want to consider maybe even working with me as a client, you can book a consultation on my website. You can choose a time online, simple and easy, and we'll chat. All right, with that, thanks for joining me today. Have a great day. See you next time.